GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. So potentially a big week coming up. It's the Fed meeting, and so we're getting a rally in the dollar going into that. We're also getting a correction in stock market, which looks very interesting, and that strong dollar is pushing down the value of gold and silver. Silver pushing into its lowest levels in several months. So a potential major long-term breakdown in silver coming up. I'm going to talk about that in just a minute. If there is anything else you would like me to discuss, please drop a comment in the video. Otherwise, just click that like button if you're enjoying the content. That really helps. Let's jump straight into the euro dollar currency. So let's just have a look at the bigger picture here. This is a potential long-term double top setup. It's pretty clear to see. And so I haven't drawn it here, but I think probably what we're looking at here is a rising neckline. We broke down through it. In real life, these things are never perfect. We got a false breakdown. We basically hit that support from the low in January, and we went back above the rising neckline, but we just ran straight into that resistance from those previous peaks and rolled over, and now we're back at that horizontal supports again. And potentially now, having done this little false breakdown scenario, but been unable to push up to new highs, we're now eyeing up the chance that this double top pattern plays out again. And then you can see this weakness on the daily chart here. You can see us touching these highs and just rolling over. I think one thing that was interesting and a kind of proof of the weakness is that when we had this first rally off the false breakdown that I mentioned, we pulled back from the 20-day moving average, and then we put in this bullish engulfing candlestick here, rallied up to the high, and then that would have been sort of normal to pull back into that demand area. People did buy into that demand area. You can see it here. You can see this long wick on this candlestick, and you can see they tried to push the price up the following day, but then sellers came in en masse, pushed it right back down again. Then we eventually got this big sell-off through that initial support, and then it's been looking pretty soft ever since. And it's that last bit of price action that suggests to me that we're eyeing up a big breakdown of 117 here, but it hasn't happened yet. The support could still hold, so look for the price action in this 1650 to 1700 area, because potentially a big buy at support, but I suspect we're looking at a breakdown. That's what all the indications are to me. Now, not a dissimilar situation in the British pound. Drawn these trend lines in previous weeks. I think this rising trend line here best shows what the trend was and what it is now. And this is why, the break of this rising trend line and the sharp action lower from it is why I tend to not want to be a buyer in sterling at the moment. We are coming into a demand zone here, so we could get a pop, but I think the way that's probably best used is a chance to sell into this support up here in anticipation of lower prices. Again, we're oversold on the 4-hour RSI, which is another reason to think we probably get a short-term pop. But the way I look at this oversold level in RSI is telling us that the momentum is very weak, and that actually we want to be a seller. We don't want to be a seller when the market's oversold, but we want to see that it's oversold, wait for that pop out of oversold territory, and then look to reload our shorts. That's generally the way to approach these scenarios with the RSI, with the breakdowns of these rising trend lines in my book. And then last week, actually, we had another version of the trend line which worked pretty good to give you a second opportunity. If you take it from this low here down to this low, you can see 1, 2, bounced pretty neatly off it, and got the bounce up to 138, and then crashed down through it with that this big bearish engulfing candlestick here, which eventually took us 100 pips lower, down to 137, and that's where we find ourselves. And a reminder of the bigger picture, we're part of this big long-term trading range. We're not testing the bottom of the range yet. That's at 136, but it looks like we're on the way there. We just have not been able to get through 139. 139 was resistance here. We got basically a false breakout. I think the way we can describe it now. 139, tried to break through it, just couldn't happen, rolled over. This was a potential sign of strength because we didn't exactly break through the lows, but we came close. We rallied up, but then, 1, 2, 3 times just got sold off before and lastly just above 139. And now we find ourselves 200 pips low at 137 again. It just looks to me like we're going through a period of dollar strength, major currency weakness, and it's pretty easy to find the source of that, right? We've got the Fed meeting this week, and the Fed are talking about tapering. So, printing less dollars. The dollars that we have are going to be worth a bit more relative to these other currencies where that dollar printing is still happening. Admittedly, the BOE still also looking at tapering as well. So I think the pound is probably going to fare better than the euro, but it's probably better to try and do that with euro sterling rather than the dollar. The dollar is the main feature here. The dollar is looking strong. Moving over to dollar yen. You can see on this daily chart that we've been in a pretty fixed range. We talked about it the last few weeks, 109 to sort of 110.50-ish. If I drop down to the 4-hour chart, you can see that we bounced off not the bottom of this, not quite 109, not quite the kind of longer term level, but these last lows from mid-August, we hit it to the pip. Nice kind of pin bar or hammer pattern, depending on how you like to call it. Good bullish signal off support. I mean, that's just classic technical analysis there. To the pip, hitting the support and forming a bullish Japanese candlestick pattern. We rallied another 70 pips off it, and then eventually stopped at 110 and the previous high. So just pure. That's just textbook technical analysis there. We're pulling back from 110 at the moment. Given the whole situation, it looks like dollar strength around the Fed meeting. You can look to buy any weakness in dollar yen at firstly this little demand area here that created this last leg up, or potentially back down, even if we get a deeper sell-off, back down to these lows after this hammer pattern. That could also be a place to buy into it. I mentioned before with dollar yen, it sort of depends if we're getting a major sell-off in the stock market this week, which also looks like a possibility. I'm going to come up with that in a minute. Then actually dollar yen could sell off if it's a risk-off move in the markets. If it's just dollar strength, then you'd expect dollar yen to move higher. Right, let's move on to precious metals. Start with gold. This is the daily chart. We've been sounding the alarms ever since, touching this resistance and failing. And then we broke down through this rising trend line. It looked like, I've missed the boat on the sell-off because that was such a hefty sell-off through 1800. But no, there's plenty of way to the downside since. We consolidated, and it was in this consolidation that was the time, we said at the time, but also with the benefit of hindsight, to load back up on those shorts, and the market sold off again. We're moving from 1800. We're now down at 1750. Naturally, you'd look for a move probably down towards this, where the flash crash stabilized would be the first area of support. But then naturally 1700, and then these lows from back of last year. Not last year, from March, sorry, around 1680. That's assuming that this gold market continues to roll over, and obviously that makes the assumption the US dollar continues to rise, and it may not, but that's just the direction of the trend at the moment. Silver actually looks worse than gold, getting a bit of a lift short term, but if I pull us up to our weekly chart, you can see that 22 is major support here. I could probably see it if I better zoom out the daily chart. It looks slightly better. Major support at 22. We're testing that level at the moment, getting a little rebound short term, but the market's looking pretty soft, and we're below this declining trend line. It could turn out to be a double bottom. This would be only really the fourth test, and quite often it's the fifth test that breaks. So we could get a decent rally off here, back towards this rising trend line, declining trend line again. Somewhere up. We could even get up to 24 again potentially. But the trend is lower, and I would not be inclined yet to be buying into this as a double bottom pattern. To me, the momentum looks to the downside. Again, it's the situation we've gone oversold on the RSI on the 4-hour chart. Don't want to be selling right when it's oversold, but probably we do want to be selling overall. Where might we do that? Well, this was the major support that was broken, which was basically 23. So if we're able to get up to 23 again, that would be that'd be an obvious area to look at for the price to roll over again, and slightly lower from there. If I kind of zoom in the candles a bit, you can see where we had that first sell-off through the support, and when we stabilized with a few candlesticks. If we can get up to where we stabilized there, it's about 22.75. That could be the start of the opportunity to sell the market back down again. Crude oil, we highlighted this supply area last week, about 72.50, and was it 72.50 or was it even 73? I think the highs of it is 70. Yeah, in that vicinity. We've pulled back from there. We maybe could just stabilize at these previous peaks. That would be the first opportunity. We haven't quite got there yet. But the fact that we dipped and then kind of rolled over, bounced, rolled over, bounced, rolled over, it suggests to me that maybe these highs aren't going to do it. And actually, this was the major zone of resistance that we were able to break through alongside the declining trend line. That's what we kind of got the breakout from. So it might be that we just pull back to that resistance zone turned support zone. Now looking at the stock market, first look at the daily chart, and we've been talking about it for, I think, months. The 50-day moving average has now broken. We're pushing down to the downside. We've broken through a rising trend line on the price chart. We've also broken through a slightly shorter term rising trend line on RSI, dropped through it and then neatly retested and rolled over. Various indicators pointing to a reversal of the uptrend at the moment, and we've only just come off a bit. We're at 4,400 thereabouts as I speak, and the high was about 4,550. So we're about 150 points in the S&P 500 off the high. That's not much. We're still well off a deeper correction. So I point to, you can refer to last week's webinar where I drew out the 5% and the 10% correction levels. That's still those are still targets. And then obviously way down here we've got 4,000, which is always a kind of benchmark. Which if the sell-off starts getting deep, that round number is something to keep an eye on. But overall, yes, I mean the market's looking soft. And you can see that we're taking out, we just weren't able to get through these previous highs. We've got the breakdown through the lows, and bit difficult to sell into what has just been sustained weakness over the past couple of days. But overall environment that I think is difficult to go short the stock market, but if there is any time that you're going to do it, this would be one of those times, I think. Last but not least, let's look at Bitcoin. It's a bit of a kind of choppy old market. I've been cautious on it ever since we had that false breakout. This was the big sell-off, and then we stabilized. We had basically a triple bottom. We rallied up there, but we failed to break out through the 61.8 retracement. I mentioned that afterwards. We had that kind of little island candlestick and then the big bearish one. And I've been cautious ever since that, and it looks like we've just retraced 50% of it. You can see on the 4-hour chart that I've made a false breakout of the 50% retracement of that big sell-off. And now, as of the weekend, Bitcoin is rolling over. So it looks soft to me. We could get buyers coming in at this same level of support, but it's already been tested a few times around sort of 4,400, a bit below 4,400. So it looks to me like we roll over. Bitcoin, in recent times, has generally sold off when there's a risk-off move. So the S&P 500 is moving lower, and so it sort of stands to reason that Bitcoin is moving lower too. All right, let's call it a day there. Thank you very much for watching, everyone. Good luck trading this week, and make sure to subscribe to the videos so you don't miss next week's. Thank you, everyone.